Hello, hello, and welcome to the Killer Whale Ventures live stream. Go ahead and give us a like and subscribe and drop your TradingView username into our Discord channel to get access to all the cutting edge tools that we talk about here on the stream. So it's getting to be end of year, and we do have an end of year sale running for the remainder of December here. That's 50% off of all KWIP subscriptions, whether they're new or existing or renewing. So we have a lot of people taking advantage of that right now. You can get access to all of that at killerwhaleventures.com using code CyberMonday50, and you'll get 50% off of all new or existing subscriptions. All right, very cool. If you want access to these industry grade tools, you know what to do. Let's go ahead and jump right in. These Friday streams are maybe going to be a bit more about review of the week and, you know, just overall seeing where we're at, maybe going over a few things. Crypto never sleeps, as we know, but typically weekends are usually pretty quiet. So we'll just jump right into Bitcoin here. So if we're taking a look at Bitcoin, let me go ahead and turn our long-term accumulation algorithm off so we can just look at it on a technical basis. Yesterday, we were talking about the fact that Bitcoin has been holding this first profit target from the bear pole bear flag as support, and you can see that happened again today, where we did get, over the last 12 hours, we got a nice push to the upside, bringing us all the way from $85,000 back up to that $88,000 region. We do have targets measured down to $84,000, and then down to $80,000. And as we've been talking about on the stream, we really want to maintain this $80,000 level because according to our long-term accumulation algorithms, we are in bullish control until we see that happen. So if I go ahead and turn this guy back on, you can just see this green cloud right here that we're looking at. We are still firmly above it. Actually, you can see it a little bit better on this chart. Here we go. So our green bullish control zone cloud, again, we've been in this since the beginning of 2023. So you can see we have been in bullish control all the way since the beginning of 2023. This is really the first time we've come to test this area as support. And with those targets being measured to the downside, we really want to stay above that $80,000 level. If we start having 6 and 12 and 1 day, 6 hour, 12 hour, and 1 day candles closing below this $80,000 region, we might be singing a bit of a different tune because we will be in bearish control at that point. So really, we just want to see Bitcoin either put in a double bottom or a higher low here and start moving back to the upside to remain firmly in bullish control, but bearish until proven otherwise at the moment. So we just have our targets nice and measured out here. Very bottom target being all the way down at 65,000, which if we do lose this level, it wouldn't be surprising at all to go revisit some of these lower levels. But ultimately, we just want to stay above that $80,000 region, and we'll remain bullish in our analysis until that time. All right, moving on to Ethereum. We're going to be moving pretty quick today. So if anybody has any comments, questions, just go ahead and drop them in the live chat in our YouTube here, and I will make sure to address them as they come up. Again, this stream is going to be 100% community driven. We want to do asset reviews, we want to do indicator reviews, strategy reviews, and there's a whole lot more that we're doing in the background here to get this stream to be a little bit more engaging, a little bit more time friendly, doing things like starting to timestamp the analysis for different assets. If there's anything that you would like us to do, just go ahead and drop it in the comments, and we will take that to heart. We'll review it amongst ourselves, and we'll try and accommodate for you, especially in these early days when, we've gained probably 20 subscribers over the last week, which I really appreciate. Thank you, everybody, for that. And yeah, let's go ahead and talk about Ethereum. So Ethereum's been in this descending channel, which we've been sizing up for about 2 weeks now. And we did have a breakout of this descending channel with a very, very nice, perfect retest here. We entered about this 2,900 region, and then we hit target number 1 very, very quickly. So what we do here with these technical analysis style of plays is we take 50% off of our trade at target number 1. So this being a 2-to-1 risk to reward, no matter what happens here, we're still going to make money even if we come and hit our stop loss, right? We took 50% off of the table, 2-to-1 risk to reward. We'll make a little something, but you can see we are finding a bit of support, and we are back into, this play versus just going straight to our stop loss. This stop loss is measured just slightly below this most recent swing low. So we really just want to see a more consecutive higher lows from this point forward, and that would lead us into our greater descending broadening formation, hopefully taking us back up to 4,000, but we're just going to take it one day at a time here. We have targets measured up at 3,600 and 3,900 respectively. Going to move on from Ethereum. Let's go ahead and talk about Binance Coin. We got in this play just a little bit late because I was deciding what assets that I want to talk about daily on the stream, and I noticed that Binance Coin we've had great success with over the years, just accumulating long term, which is what you're looking at here as far as the long-term accumulation algorithm. You can see that algorithm's been 83% profitable and done quite well over the years here. So let's go ahead and just disable our long-term algorithm and talk about it from a purely technical standpoint. So again, got in a little bit late. We're actually entered right over where this circle is. We did have the a perfect breakout and then retest of the descending trend line from this descending triangle. Since the angle of this descending triangle is very heavily sloping to the downside, we are playing this thing, with the outlook that we will go and achieve our targets here. But we have put our risk to reward at 1.38 to 1 for target number 2, 3.47 to 1, and for target number 3, 5.4 to 1. So overall, we're really just looking for some of these targets to be achieved. Gave this thing out till January, but you know what? I'm going to measure a little bit further here because what we really want to do is measure from about where the structure started. So we could give it about that long to where the structure broke out. So we want to give it a minimum of about 46 days. So yeah, we're right about there. From where I entered, we could even go out just a little bit further here. So that's what we'll do on this particular one. So let's go out to about end of January. So I'd be really surprised if we see these top targets end of January. I might even give this a little bit longer and just say end of February. And we really need to see some bullish action in the market overall in order for this to play out at all. So total speculation on this one at the moment. This is assuming that Bitcoin wants to have a bit of a bounce and a turnaround. All right, let's move on to XRP. XRP firmly in this descending channel. We've been in this descending channel since about October 10th, October 8th, somewhere in that area. What we're looking at here on a technical basis is a descending broadening formation, which is much larger, but currently we're stuck in this descending channel, and we are expecting a breakout to the upside at some point, but we just have to wait and see. I've put that, potential breakout zone beginning of January, about January 5th at the moment. I have moved it around a couple of times, just kind of seeing what the price action's doing, but I'm just going to go ahead and say, around that January 5th, if we do see some positive action in the space. We also have found support right at this capitulation move from October 10th. So that support that we're sitting at right now is about $1.77. And if we look back in time, we found support, back in April of 2025 and then also of February 2025. So, several times we've seen support right in this area. It could give us the conviction that we need to potentially break out of this descending channel at some point, but just kind of sitting and waiting until we see some action that would lead us to take a low risk entry. Solana also is finding support in this area. Again, I've been talking about this zone of confluence, which is this purple box that you're looking at right here. This purple box has acted as support for a very long time. Let's see, all the way back to March. It's this zone of confluence started back in December of 2023. It acted as resistance once, and then we've seen it act as resistance and support here, support here, support here. You know, so that's back in March, April of 2024. We've seen it act as support June and August and September 2024. And most recently this year, we saw it act as support back in March and then also in June, and then where we are right now. It looked like we were maybe going to be breaking out underneath it, and we did have a candle close below it, but this isn't really like set in stone. You know, this is just an area of interest where we can size up a lower risk entry. So at the moment, Solana, we're still just waiting to see some kind of breakout of this descending channel pattern. We've also kind of put our long-term accumulation on hold once this trend flipped bearish. I just stopped accumulating because I've been accumulating Solana for a very, very long time already. And I just didn't see a need to continue to accumulate unless we're in a bullish trend again. So what I'm hoping to see here, long story short, is a breakout that'll put us back into a bullish control zone in which we can size up some of these targets with a lower risk entry point. And I have my risk to reward on this so far is 1 to 1. 2.69 to 1, and 4.64 to 1 for targets number 1, 2, and 3. Solana, very good. Moving on. Tron, this thing is kind of an outlier in the space. It's definitely in a descending channel like we've seen a lot across a lot of different assets, right? But what's good about Tron in particular is this thing just has not had bear markets like the rest of the market. You know, the rest of the greater crypto market. When we see downside, we see some pretty severe downside, especially in coins that are like outside of, you know, the top 30. They just get wrecked, right? So here we've never actually been in bearish control on our long-term TRX algorithm, which is what you're looking at right here. All of these blue triangles are entries that we've made on TRX here. So really we're just looking to make a bit of a technical analysis style of play. This algorithm, which you can totally have access to. All you got to do is drop your TradingView username into our Discord support, and you can use this exact same algorithm if you want. Or you can tweak it to your own liking, right? The reason that this thing has been 100% successful, that's right, it's had 431 successful trades with no losses. How is that possible? Well, we just have been accumulating for some time, and we sell in very particular areas with very particular risk management settings that are available through our UT bot algorithm. We have several different versions available. Just check out the description below. You can have access to all of these completely for free if you're interested in learning how to do algorithm intelligence and technical based risk management. So you can see we have our entry strategies, additional entry, exit strategy, take profit strategy, trailing stop loss strategy, and all of these are completely customizable to your liking and to your risk management style, right? So TRX, just kind of speculating on an upside move at some point where we'll break out and potentially be able to measure some targets with some lower risk entries based on technical analysis. All right, moving on to gold here. Gold is still in a breakout that we have identified as of, you know, a week and a half or so ago. Let's see, we started breaking out on December 11th. So this thing's been breaking out for 8 days now. And we called this breakout as we were coming up to the top of this descending triangle. You could have probably played it from right here, but I found the more low risk entry point to be where we're playing it from right here. We have targets measured. Our top target at the moment is $5,400 an ounce on gold. So right now we're really just looking for this first target where we're going to take 50% of our trade off of the table. The risk to reward on this first target is 2.35 to 1. So even if we hit the target and come back down for a stop loss, we're still going to make money on this play. Okay, target number 2, 6.65 to 1. Target number 3, 9.44 to 1. And target number 4, 16 to 1. So this is a very low risk play, and I think it's going to play out over the course of time. Just from the past, 2 years, if we look at the price of gold, it's just been an absolute moonshot since the beginning of 2024. So I do think we could reach these targets probably by May 2026. That's where I have this measured all the way out to. So we'll see. It's just a longer term buy and hold kind of trade. And then also what I did is I turned on our selling capabilities. So if I zoom in here to like today's price action, for example, we got both a buy and a sell signal today, right? So today we were buying and we were selling. We were shedding 10% of our position and we were adding to our position at the same time. So the reason that this thing has been able to be 100% profitable is because we only sell if we're in profit, right? These positions that are getting taken off right here, this minus 10% of the position that came off today, you know, that's because we've been accumulating this asset for a very, very long time, right? So all the way back here, you can see all of these purple triangles are all exits if we were using this this current methodology, right? And you can see if we go to the strategy backtester, 100% successful trades. How are we able to do that? We have very specific rules that we follow. If you want access to this stuff, again, just drop your TradingView username in our Discord and I will get you access to all of our invite-only scripts that are available while we're getting this stream off the ground. You will be grandfathered in to these scripts once we, as we're getting this stream off the ground. So eventually, when we start charging for them again, you will have access to all of these completely for free just because you were here when we first started this stream. Okay, moving on. Let's go to the stocks. So stocks, we've been sizing up in a few different ways. Google's had an absolutely massive run, right? And we are expecting some sort of downside at some point. So we measured targets down to that 260 region, targets down to 236, and targets down to 200. What I do like about this target all the way down here at 200 is it would match up to come back for support from this previous all-time high, but we may not see that, right? We're just sizing up based upon this ascending channel that we've been in since June 2025. We've been in a very heavily upsloping ascending channel, and what can happen from there is typically there is a breakout to the downside, which I'm going to show you playing out on Apple as well in just a minute here. So Google looking for some downside targets. Let's go ahead and move on to Tesla. Tesla, we are in a breakout right now, which we've been talking about. We're actually in two breakouts. So we've been playing Tesla since about August of 2025. And we've achieved 2 of our 3 targets on Tesla on this August 2025 breakout. And we're really just waiting for that third target. Now, there's another formation, this descending broadening formation, that we're playing right now as well. So we are in a secondary trade entry that is looking for target number 1 at about $503. So really between our target number 1 for this descending broadening formation play and target number 2 at 528, if we do go up to target number 2, we're also going to achieve the top target that we've been waiting on since August. So I know that's a lot to take in. If anybody wants me to explain something, or you have a question, or hey, how do you measure targets, and like where do you measure the distance from and why, just go ahead and ask a question in the comments. I'll be sure to address it live on stream here. Okay, very good. Tesla looking absolutely amazing. I'm fully expecting to hit target number 1 and target number 2 of this descending formation, and then target number 3 of our previous jump the creek, kind of descending triangle breakout that we had earlier this year. Moving on, Meta. So Meta, I was sizing up a little bit as like a cup and handle kind of thing going on here within a larger descending broadening structure. What I would like to see here is we do continue to form the handle of this, and at some point we break the neckline. Have not entered this trade and will not enter this trade until we see a solid daily candle close above the neckline. So if in early next week we get a daily candle close above the neckline, I will be sizing this thing up. I will be taking an entry on Meta with the assumption that we have a low risk style of entry. We've sized up our risk to reward, which we're looking at the moment. Our first target's only 1-to-1. So if we hit our first target, cut back to stop loss, it'll be a break even trade. Second target is 2.6-to-1, and third target is 3.3-to-1. So basically what I'm looking for here is if this cup and handle kind of formation starts to play out, we're going to enter once. And then if this descending broadening formation starts to play out, we're going to size up targets all the way up around like $700 and $800, yeah, like $800 to $850 and potentially even higher depending on where this thing starts to break out. So I am expecting some stuff on Meta. We're just going to leave it where it is right now and keep a close eye, because if we get a daily candle close above 672.81, daily candle close above 672.81, I will be entering this thing with a vengeance. All right, moving on to Amazon. Amazon, bada bing, bada boom, we are looking at a very heavily sloping descending broadening formation. If you haven't gotten tired of me saying descending broadening formation yet, you got something coming, because I am going to be saying this a lot in this stream. This is my favorite pattern to play in all of crypto, all of stocks, everything, right? The reason is it's very easy to size up low risk entries that typically tend to play out, especially in things like stocks where stocks go up, right? So right now we have seen that move that we were looking for on Amazon, where if we just zoom way in here, did we get a candle close above that line? Well, I'm zooming in and it looks like we got a candle close right on that trend line. So that's not quite going to be enough for me just to go ham into entering this thing. I'm going to want to see one more day where we have a candle close above this trend line. And when that happens, I'm going to be switching up my targets a little bit. I'm going to be measuring exactly from where we're taking this entry. And we're going to, try and ride this thing. Target number 1 has a risk to reward of 2.79 to 1. Target number 2, 4.55 to 1. Target number 3, 6.8 to 1. And then target number 4, 9.5 to 1. So really well sized up, low risk entry. If we can achieve any of these targets, especially target number 1, we take 50% off the table. We're going to be doing really nicely on this play, even just achieving target number 1. So again, not quite the conviction I needed of a full-on breakout. I would like to see a breakout and retest. That's ultimately the best, but I will be starting to enter this position when we have a daily candle close above this descending trend line. Okay, and then let's go ahead and go to Apple. So what are we seeing here on Apple? Apple and Google are in very similar predicaments, and what we're looking at here is, as we discussed earlier this week, I think Monday or Tuesday, we had one of my partners on, and he was talking about the potential downside for Apple. We've sized that up. It started to break out, and just today we're seeing a retest of that ascending trend line on the bottom of our ascending channel. This is absolutely picture perfect, and I'm probably going to be taking a short play on Apple. I'm not really much of a short seller, just by nature of, I'm much more of a long-term swing type of trader, but this is just looking too perfect not to at least shoot for 1 or 2 targets here. I do think we're going to see some downside action. And if we just look at how these targets have played out before, just take a look at Apple here, right? We started forming a descending broadening formation December of 2024. The beginning of the year was very bearish for the entire stock market, but it formed these really well laid out low risk entry points, right? And you can see here, we absolutely crushed Apple for all 3 targets from June 2025 until October 2025, right? We basically just went straight to target number 1, straight to target number 2. We were able to move our stop loss to break even at target number 2, and then straight up to target number 3. This thing needs to have a cool off, and look what's happening. We're able to really easily measure a low risk short entry here if we so desire, because we've broken out. We're having that retest. So come Monday, I will be looking to maybe enter some short contracts, just either selling some of the holding that I have, or just going straight up short in my Charles Schwab or Webull or something like that, right? So we do have targets. I don't think we're going to get all the way down to this third target of 225, but even if we go to target number 1, we have a 1.9 risk to reward. So if we hit that, we'll take 50% of our trade off the table. Even if we come back to stop out, we're going to make money on this play. So I'm going to be looking to do something regarding Apple, and I would definitely size this up. Maybe take a screenshot if you want. I'll pause it here for a second, but yeah, just take a screenshot if you need to look at this again. But yeah, it looks absolutely perfect. Moving on. Microsoft, boom, breaking out of a descending channel breakout on Microsoft here. I'm getting excited, but basically what we're looking at here is Microsoft already broke out. We had a solid daily candle close. If I go, let's go look at the daily. That was on the hourly chart. Okay, so what led us to this analysis that we're making right now? We had a double top or a tweezer top. If you looked at it on like the weekly, this is more of a tweezer top. So we were expecting downside action from this immediate rejection. We got that downside action in the form of a descending channel, a very well laid out descending channel. Now, what are we looking at here? We're looking at a breakout because we had a daily candle close above. Let me just go ahead and make this a little smaller so it's easier to take a look at here. Maybe. There we go. Okay. So we did have a daily candle close above the descending channel top trend line, right? So let me go back to the hourly chart, and we're just going to size this thing up. Okay. So I am still looking for the retest, right? But because we got that daily candle close, we've already entered this play. What we're looking for here is we have a risk to reward of 2.73 to 1. So we need to hit target number 1. When we hit target number 1, we're going to take 50% of our trade off the table so that no matter what, if we come back to stop loss, we will make money on this play. Second, target number 2 up at 526. If we hit target number 2, we're going to move our stop loss up to break even. So 50% off at target number 1, move your stop loss to break even at target number 2, and target number 3 is back up around all-time high at $560. I have this thing measured currently out until January, but I'm going to extend that to the end of February just because I think we could go a little bit longer than that. Let's see here. February 5th. It stopped going, but yeah, we're going to measure it about the end of February there. And I'm just going to watch this thing play out, right? We already have our stop loss established. We already have our profit targets established, and you're going to be seeing this thing play out live on stream here. NVIDIA, boom. Today, we got a daily candle close above our descending channel here, right? We're looking at the daily chart. You can see we clearly closed above it on the daily. I will be entering this play on Monday, right? The targets we have measured are 2.9 to 1, 6.1 to 1, and 7.3 to 1. So come Monday, I will be entering this play. What I really want to see is a retest of this descending trend line, but we just haven't been getting that a whole lot in stock. So I've been entering my entry parameter is a daily candle close above the descending trend line, right? So descending channel, top trend line, daily close above it. That for me is confirmation enough to size this thing up. Low risk, high reward play. Okay? Any questions about that? Just drop them in the channel. Okay, we got some comments here. Some of the divergence we are seeing in the tech industry is interesting. Yeah, if you'd care to elaborate a little bit on that, we can definitely talk about it. Love playing Apple options as well, nice and cheap. Okay, yep, so that's from my partner saying that Apple options are typically cheaper, which we've talked about before, and I will have him on again. And if anybody's interested in options, just go ahead and let us know, either in Discord, in the comments, whatever, right? Okay, so that's really it for the TA, the review that we've done on the Mag 7. We've reviewed the top crypto assets, right? Bitcoin, Ethereum, Binance Coin, so on and so forth. So what I would like to talk about, what I'd like to finish this stream with today is the fact that we have been working on some of these day trading algorithms. We've been working on a lot of them for a while, but we've been having some success with a few of these very, very well thought out, designed to pass prop firm tests type of algorithms. And you guessed it, sure enough, today we passed a 25K account using the exact algorithm that I have pulled up on stream here. You can see that this thing had a total of 11 trades. 8 out of 11 were successful, a max drawdown of $353. So we're using an Apex account for this particular, an Apex 25K account. You can see In order to pass an Apex 25K account, we're really focused on the lower account sizes, 25K, 50K. They just have a much lower barrier to entry. And you can see here, we passed it today. 26,553 is our total after 11 trades. This thing started on December 7th and has been going until today. So it's been going for about, 12 days or so, not even 2 weeks, right? So yes, very, very good. It did what it's designed to do. And if anybody wants to chat about this kind of stuff, if they're interested in passing prop evaluations, that's what we're really focused on right now, is passing these lower tier accounts. The barrier to entry is low. You don't have to blow a whole bunch of tests and accounts if you have proper risk management. So I'm just going to go ahead and pop this back over here, and we can go ahead and talk about it. So this thing pretty much went straight to funding. It took 12 days, like we were talking about. So if we review the last 12 days, for example, today we had a $550 trade, right? That happened around 1 in the morning, so during Asia session, London session. And then the day before that, we had a successful trade. Day before that, successful. So, we were looking at 1, 2, 3, 4, 5, 6 successful days in a row. 1 day with loss, 7, 8, 9, 10. So, yeah, out of our 12 days, we had 10 positive days and 2 days with loss, right? All we're doing in this algorithm specifically is if it trades and it wins, it's going to stop trading for the day, right? That helps us remain consistent. Helps our automation process. It just overall, we hit our trade, we pack it up, see you tomorrow. But if it's not totally successful on the first try, it can try up to 3 times in a day, right? So since I've been discovering that this thing is actually successful and we can pass prop firm evaluations with it, I've made a series of different variations. So this variation will trade. It'll just continue to trade. If it makes over $500 in a day, it'll stop trading for the day. But this one can continue to trade until that happens. Either that, or if it trades with a loss of over 500, it'll also stop trading for the day. Got this one running on a 150K account, and that 150K account is up about 2,000 after today, it looks like. Let's just take a look. Yep, so after today, we're up at 151,984. So when I started streaming, this thing got started the same day we started streaming on this channel. So you can see we've already made a $2,000 gain off of this algorithm going towards getting this account funded. So this is 150K, a little bit, we can take on a little bit more spice with the 150K. You can see the max equity drawdown on this one is 3,900. So on Tradify, the account that I'm using has a max equity drawdown of 4,500. So this fits within those metrics, right? Let's go ahead and look at the one that I was just looking at. So in order to pass 25K accounts, I have this one set with a max equity drawdown of 1,600. So max equity drawdown on a 25K account is 1,500. So we were able to achieve that with 10 successful days and 2 days with loss. So this algorithm is definitely sticking around. If you're interested in any of this stuff, just go ahead and ping us in our Discord support. And then let's go ahead and look at the third variation I've been working on. So this one has a max equity drawdown of 4,000. This would be for a higher account, probably like a 150 to 250K account on something like Apex. Or if you were doing like a live funded account on Tradify, you could do a 150K account because those have $6,000 of drawdown. So again, just a slight variation of the same thing, right? All we're doing is taking 1 to 2 trades a day, possibly more trades depending on how successful we are that day. But again, you can see we're keeping our drawdown well within the limits of the account type that we're using, right? And then the other one that I've been working on here for the past couple of weeks, going into streaming these things live, is this one. This is the same sort of methodology, but it only trades during New York session. And today we had a $2,000 positive day on this one as well. This one's a bit more choppy. New York session is very, very volatile. So, we have losing days mixed in with winning days. But overall, you might not be able to quite see it, but November would have produced a profit of around almost 13,000, September 6,000, August 5,000, so on and so forth. So very, very focused on getting these futures algorithms to the point where they're just passing prop firms, and we can start to do some like prop farming where we have multiple accounts using the same signals and, you know, stacking those accounts up to like 20 accounts on Apex or up to 5 accounts on TRADINGVIEW. So we have discount links for both TRADINGVIEW and Apex in the description below. If you're at all interested in futures automation, just ping us in our Discord support. We'll get you access to all of our different algorithms. We'll tell you all the tools in our toolbox. Like this one, for example, is another provider, Algo Pro. They got great stuff. It's super cheap to get like a lifetime subscription. You know, not affiliated with them at all, but just, you know, another tool in the toolbox. So very, very focused on the future stuff for like the day-to-day, and also using prop firms as a way to manage our risk, right? Because if you're sending signals to a cash account, you better be watching when this thing is trading, right? It takes a little bit of the stress away from it. Actually, it takes almost all of the stress away from it when you're automating things to prop accounts. And if you've ever traded on a prop account, you know it's very difficult to pass the test. So here we are all about risk management and automation. We're going to be building the world's largest algorithmic trading community. So go ahead and like and subscribe if that sounds good to you, and we'll continue to develop this stuff. The last thing I want to talk about is this gold algorithm that I've been producing over the last couple of weeks here as well. This one's been doing extremely well with a profit target. So using a single contract, we're able to produce this result with a $1,000 drawdown. So this would fit on any account type, all the way from 25K as high as you want to go. And if you want to use higher account types, all you're going to have to do for this strategy is just double up on the number of contracts you're using, right? If you want to do more like a 2,000 drawdown, then you would have 2 contracts enter instead of 1. So happy to show you all this stuff. This one isn't quite finished yet, so once I do finish this one, I'll be giving this one away live on stream as well. If you are not interested in automation and you kind of want the work done for you, well, that's great too, because if you go to killerwhaleventures.com, we connect to all major exchanges, and you can automate your portfolio using either conservative, moderate, or aggressive outlook on the market. Again, we're running our sale Cyber Monday 50 for 50% off of all new and existing KWIP subscriptions. So we'd appreciate if you just take a look at that stuff as well, because that is how we keep the stream rolling here. So thank you very much. That's going to be it for today, and I wish you all a happy holiday. Probably be a little bit sporadic next week, but we'll be back at it full time after the first of the year. So thank you all very much. Have a fantastic evening.